Consumers, maybe bond investors, may be a little concerned about things, but my next guest is with the soft landing consensus and says we should look forward to a Santa Claus rally. Joining me with what's got him so bullish and the names to buy now is Chris Marangi. He's Gabelli Funds co-CIO of Value. Welcome. Thank you for coming in, Seth. Quite the intro, I know. No one ever wants to say, hey, I'm with the consensus, but tell me what informs your view that we might be able, more like Steve Leisman and Steve Odland were talking about, to avoid a hard landing here for the economy.
Yeah, so we're bottom up. We're listening to conference calls, and consensus seems to be that the economy is slowing, but disinflation is setting in, rates have probably peaked, and that probably means that we're in for what I would call a softish landing in 2024. Where we get maybe a mild recession, a slowdown in growth, but we can see through that to better times.
So Steve Leisman raised the idea of whether companies have been in a pre-recession, preparing in some ways for leaner times and therefore maybe avoiding them. I kind of look at it a little differently, and I'd want your take on this, which is that if anything, they feel like they've been hoarding labor. They refuse to budge on price. Consumers are starting to push back, and we already see revenues barely growing last quarter while earnings were up, and that doesn't feel sustainable. So I kind of worry it's all going to get tugged in that direction.
Well, on the other hand, you've seen a lot of destocking. You've had a lot of industrial companies in particular clearing out their inventory, and that's already taken place and cleared the decks for growth next year.
So where are you most bullish?
Well, one of the areas that we've liked for a long time and has been painful has been media.
You like media of all the things?
I think you've got to look beyond the Magnificent Seven.
Sure.
And which is not a knock on the Mag 7. They really were the perfect safe havens for 2023, cash machines protected by fortress balance sheets. And they started the year downright cheap. But at this point, if we are going to get a softish landing and rates have peaked, you got to look beyond that. And in general, there's a lot of opportunity, we think, in small cap, which trades at half the valuation of the broader market.
Gabelli himself, if I'm not mistaken, is a longtime fan of media, certain media and cable stocks. But haven't times changed? I mean, it's not 1993 anymore.
That's definitely true, and that's why it's been so painful as we've gone from this transition from the dual revenue stream model to on demand all the time. And we're probably at an inflection point now where you're seeing cost rationalization, you're seeing price increases among the streaming services. And you're seeing the beginnings of a great rebundling, whether that's content from AMC appearing on Max or a rebundling by Charter, Comcast, and AMC of streaming services. That's all to come. And we're in a state of disequilibrium right now, and that's probably going to be addressed by consolidation. There's going to be lots of deals in 2024.
Well, we were supposed to get a lot of deals this year, and it's been fairly quiet, some would say. But why do you think that it's not going to end up being big tech that rebundles everything? Because I look at what's going on with YouTube, and it feels like that's the bleeding edge here.
Well, YouTube will be, at some point, probably the largest distributor of pay TV in the country over the next few years. And you're right, tech will probably rebundle a lot of these streaming services, but the traditional distributors like cable are going to have a place as well, and that's to the good of those who actually produce content.
Or I've always thought if we're rebundling, then does our business model need to change that much? In other words, if we've gone from having one customer who needs to pay for channels to a different one with deeper pockets, isn't that potentially good for content
Well,
providers?
what's old is new again, and that is the stabilization that we think we'll see going forward.
What are quickly some of the deals that we might expect come 2024? For instance, do you try to bet on the players like the Paramounts who seem like the weaker links that are expected to get bid up, but should likely have some premium already reflected in their shares as a result?
Yeah, that seems to be somewhat, well, it doesn't seem to be in the stock, but that's certainly an expectation of many people. A lot of people have April 8th, 2024 circled on their calendar. That's the 2-year anniversary of the reverse Morris Trust of Warner Brothers into Time Warner. And whether David Zaslav's a buyer or seller, we'll see. Don't know who's going to do what to whom, but something is going to happen. Whether that's Sony, do they want to be in the content business? Does ESPN trade someplace else? So these are all the different things that we're looking at.
Finally, where else? Where else in the broad landscape of stocks do you think there might be some decent value?
Well, just following up on the media comments, we're very focused on certain areas of media, including owners of intellectual property. And live entertainment and sports broadly, which includes some media stocks, some non-media stocks, is a very interesting place. This trend from buying things to buying experiences was accelerated by the COVID and will continue. And some of the ways to play that are owning teams like the Atlanta Braves, which is a public company, Madison Square Garden, which owns the Knicks and the Rangers, as well as Live Nation, which is the largest producer of concerts in the world.